Back with the market right here on ET now, the handover from Asia, not all that smart, but yes, you have to put things into context. The fact that OPEC Plus has now finally reached a deal, this is going to be a decisive mandate. Let's in fact chat about that. We've got Vikas Halan joining us on the show right now. Vikas, hi, good morning. If you can hear me clearly, Vikas, your thoughts on the mandate now, the fact that OPEC Plus has agreed to finally call it truce and to cut production by almost around 10%. What does it mean for the way oil's going to trade from here?
Yeah, hi Aisha. Yeah, I can hear you very well. Look, the message coming out of OPEC is certainly positive. One of the crucial pieces of the puzzle is now in place, that you have OPEC cutting the production, and not just production cut upfront. What they have also decided to cut production, all the way to April 2022, which means that they are in for a long-term commitment to cut production, just recognizing how bad things are in terms of demand. So it will not result in prices going back immediately, but it will sort of provide some floor to the prices as we go through the crisis. But as the demand recovers, we may see oil prices recovering to more normal levels. What will be interesting beyond OPEC, and that can provide further support to oil prices, is the data coming out of non-OPEC members as to how much production cut we are looking at there. I mean, the demand for oil currently is probably down by at least 20% from where we were, or maybe even more. So a 10% production cut from just OPEC alone will not balance the market. The market will require production cuts from other oil majors, non-OPEC members, including the United States, and it will be what we need to look out for beyond OPEC.
But in the near term, are we going to see a sentimental rebound in prices nonetheless? I know that the deal will not take effect up until May 1st, but, the trade in crude, of course, would jump up ahead, right?
So we've gone through a month where the production was much higher than what it was in 2019, and we had demand that was severely lower. So we have seen storages getting full, and therefore any sort of price rebound will take a little bit of time. And let's not forget that the production cut is with effect from May 1st. So we are not yet there. There would be a sentiment-driven, some upward pressure, but I think that will not last very long as we see the inventory data coming in. What will help prices is if we start seeing production cut from non-OPEC members. And also what will help is when we see light at the end of the tunnel in terms of the virus outbreak, economies restarting. What OPEC decision would do is provide some sort of floor to the oil prices. Because if this deal wasn't there, we could have gone much lower than $20 because storages were going to get full and you would not even be able to produce. And, some of the crude grades were being sold at negative prices. So the OPEC deal in itself will not increase prices. What it will do is, in my view, provide a bit of a floor to the prices.
Okay, on that note, Vikas, good to have you on the show. We'll let you go. Thanks so much for taking the time out and speaking with us today.